The $600 tax rule is in effect for years 2022 and after. So today I'm going to share with you everything you need to know about receiving some sort of tax form in the mail for any time you had a transaction, $600 or more, or what you should do when it comes time to actually file your taxes if you indeed receive one of these tax notices. So stick around, you're not going to want to miss this. So you heard right, the IRS just wants everyone to know and be reminded that indeed, starting in the year 2022, a new tax rule applies to transactions using third-party apps, ones that I use all the time, Venmo, PayPal, Cash App. And real quick, I'm going to dive into the rules that you need to know and some suggestions about what you might want to know to help kind of save you some money. So if you appreciate content like this, drop a like for this video. Now, many people have downloaded an app. Personally, I said earlier, I use Venmo, but of course I still use PayPal and I have Cash App. These apps allow you to not only send money to friends and family, but also to send money if you are making a purchase or if you are even doing business, like you're buying something at a craft fair or at a garage sale. And the IRS is now drawing a clear line in the sand, a new line, in fact, that says $600 payments for when you are collecting money for any side hustles, small businesses, indeed need to be reported as earned income. Now, of course, what makes this a little confusing is a lot of times we send money to family and friends. For example, we paid for a trip and I just threw it all on like one of my travel credit cards, and somebody else like paid me back, like it was a couple $100 more than 600 to be honest, for the Airbnb and everything like that. So no, that does not need to be reported, nor should you be receiving any sort of tax notice from Venmo that is then sent to the IRS. But that's confusing, right? And it kind of doesn't make any sense because the old threshold used to be $20,000 and 200 or more transactions. But now the new rule is $600, and it doesn't matter the number of transactions. Now, moving on, here's what you can expect. In the beginning of the new year, you're going to receive something in the mail from one of these third-party apps, and it's going to be a 1099-K. For those of you completely unfamiliar with getting 1099s, it simply says that you had earned income and the app itself is just reporting it because it was more than $600. Of course, who's to say that the third-party apps like Venmo are going to get it right 100% of the time? So you might receive one of these tax notices and then you're supposed to get in touch with either the third-party app or attach a note when you file your tax return that 1099-K was for personal transactions, not business. Now, my head is spinning. This is going to be a logistical nightmare for these third-party apps. It's going to be confusing for people who decide to maybe do it yourself for their taxes. Let's say you use some sort of tax software and you're not used to reporting any sort of business income or getting a 1099-K, and all of a sudden you receive one. If it is legitimate, you might have to use a different tax software or pay for the higher price package. Now, of course, if you work with a professional accountant or bookkeeper, then this probably won't be that big of a deal, but you do want to make sure that you're bringing those forms to that person. You definitely don't want to throw them out or ignore them. So what can you do to help sort this or make it easy on yourself? I have a few suggestions. These are just my own opinion, but in doing my research, I noticed that Zelle, specifically the Zelle app, the one that's connected to all the different banks like Chase Pay, that does not report transactions to the IRS. And the reason for that is it is actually integrated into the banking system. It's not a third party. For example, earlier today, I went to download it to check it out, and it asked me what bank I want to connect, and that bank already had Zelle, so they didn't let me use Zelle's app. They told me to go through my banking app. For those of you that have never used Zelle, it's not as clean or maybe as user-friendly, just depending on what version of the app you're using, like your banks or the one there. But it basically did the same thing. I was able to add people from my phone based on their phone number, or add people I know based on their email, and then I can send or receive money. So I wouldn't really look at Zelle like a loophole or as a way of like circumventing the IRS, because you're not supposed to do that. But you can see here in their frequently asked questions, it says that Zelle does not report transactions made on the Zelle network to the IRS because they're just plain not required to. So therefore, they're not going to be sending out 1099-Ks. But hey, if these are legitimate business transactions, you're earning income, whether it's cash or third-party app, I want to educate you that you should indeed be reporting these, because then you also get to claim some deductions on a form called Schedule C. Again, I don't want to lose anybody here by talking about a specific tax form, but for anybody that's been an independent contractor or is a sole proprietor, maybe you've had a side hustle in the past, you can actually have multiple Schedule Cs for these different businesses. These aren't businesses that you register with your state. Rather, you're just using your name and social security number. But right there on like line number 1, you're reporting all your earned income. But what's really cool, I'm going to flash it on the screen right now, there's a whole list of deductible expenses. Things like advertising and promotional expenses, if you're running ads, if you have a website, vehicle expenses, like if you are claiming the mileage for the car you're using when you're doing business. We're talking membership fees. You can actually deduct a portion of a home office, utilities, your cell phone. The list goes on and on. I personally love kind of keeping track of all these receipts for my small businesses, because then that income on the top line gets reduced down by all of the expenses. In some ways, you can improve your quality of life or the quality of your side hustle when you realize that buying that piece of equipment, the new laptop, the machine, making the business cards, those can actually be deducted from that income. So I'll leave a link down below in the description, not only to like what a sample Schedule C looks like, but also some of the expenses that maybe you haven't really been thinking of that you might want to start to keep track of. All right, to all my small business owners out there, some key takeaways of this $600 tax rule is that if you indeed use your Venmo, Cash App, PayPal for business expenses, you use it to send and receive money, then you should anticipate receiving a tax document from that third-party app saying anytime you've had a transaction or a relationship with somebody sending you $600 or more. Now, of course, this rule isn't new in the sense where you are now needing to claim that money. No. You were always supposed to claim business income. It's just now you might be receiving multiple tax documents, and it might get a little confusing come tax time what to do with all of them. My recommendation was kind of twofold. Number one, take them, go to somebody that you like to use to do your taxes, get the best software, claim everything, but also decide to claim, if you haven't in the past, the business expenses that are legitimate and related to everything that you spend money on to be a successful independent contractor, sole proprietor, or small business owner. Also, you might want to look into the Zelle app. This is a bank-to-bank transferring app. It was kind of like late to the game because it was created by the banks, and essentially it's just you're sending funds from one bank to another. It doesn't go to like that third party first and then you withdraw it to your bank. Oh, and real quick, there are 2 bills that may potentially be passed that could change this rule. One of them's actually called the Cut Red Tape for Online Sales Act. And basically, they're looking to bump that threshold up a little bit higher from $600 all the way up to $5,000. And there's even another bill, you can't make this stuff up, known as Snoop, or Stop the Nosy Obsession with Online Payments Act. This one's looking to bump the limit back up to 20,000. So if you're watching this video and the threshold limits have changed, perhaps one of those have gone through. But let me know what you think. Leave me a comment down below. I mean, if you have an opinion strongly about this, I completely understand. But also, if you have some suggestions for other small business owners, maybe pop down there in the comments and see if you could help answer a couple of them. Also, if you're new to the channel, please don't forget to check out my website. It is full of podcasts, blog posts, other YouTube videos. And I would love it if you would hit subscribe and ring that notification bell. All right, as always, I'm Rich, and until next time.